Perfect. Lloyd just liked it. Okay, you can see it? Okay. We're live. All right, I'm just gonna take this Facebook away because it's delayed and it's weird to look at it. And you're also looking at Zoom. Okay, I'm going to share my screen. And maybe we'll just wait a couple minutes to see if some folks are going to join us. If you're watching this live or at a later date on the Facebook, hello, welcome. We're just waiting a couple minutes to see if we have folks who are going to join us on Zoom today. We might or we might not. So, do you know any jokes? I don't know any jokes.
You know what's funny?
Oh, you're muted.
What's funny is one time my art teacher was going to give away some of her art, and she said, "Does anybody know a joke?" And I had one in my head, but I couldn't remember it, so I was like, "I knew a joke." But she thought I meant I knew somebody who was a joke. So she started laughing so hard, and then I won, and she gave me the thing. But I was just trying to say I didn't remember, but yeah.
That's funny. I knew a joke. Wow, I can't really see you ever actually saying that about somebody, but that's hilarious. I like that. Okay, maybe we'll just get started because why not? We don't want to keep the people waiting. We want to give the people what they want. Okay, well, I'm Ellis, and that's Jewel. I'm pointing because Jewel's over there in my world. In your world, Jewel's probably below me. And we are here today with the second of our workshops on introduction to financial literacy. Today we're going to be talking about credit and debt. Doesn't sound that fun, but it's going to be a great time. So we're going to learn a bit about credit cards, how they work, how to choose a credit card, and then what happens when you have debt, when you owe money. What do you do? How do you figure that out to get it paid off? So we're going to chat about that. I will say I used he, him, and they, them pronouns. Jewel, do you want to say your pronouns?
My pronouns are she, her.
Perfect. And we are in the same room, so we're playing an awkward game where when one of us speaks, the other one mutes, and when the other one speaks, it's a whole thing. So we're just trying to minimize echo for you viewers at home. We want it to be a pleasant experience for you. Okay, so I think let's just jump right into it. All right, so like I said, we're going to be talking about credit and debt today. We did our name. Oh, I need to probably present. This will probably look better if I present. How does that sound? I'm going to do it. Mm-hmm. Okay, great. So we're going to talk about credit and debt today. Oh. How do you make this go to, oh, there we go. All right. Went through our name. So just going to go over community guidelines because even though we don't have other folks with us here today, these do carry on to anybody who's watching this via Facebook Live or watching this in the future in terms of how they engage with us, but also how they engage with other folks around this topic. So make sure that you're respectful of people, make sure that you're not judging people for anything. If we're going to be talking about money, and especially credit and debt can get really, it can be really anxiety inducing for people, can cause a lot of stress in people's lives. And so we want to make sure we're not judging anybody about maybe how they've spent money or how they're paying back their debt or not paying back their debt, anything like that. What's said here stays here. So that's funny because we're doing this literally on Facebook Live, so it's public. But what that kind of means is just don't share other people's stories. If people share stories on this platform, we don't need to share stories for those people. We can yeah, keep that to ourselves. Be conscious of how much time you're taking up. So we don't have participants here live with us today, but that just means for, you know, when we have participants in the future, just think about how much time you're spending speaking or sharing stories or asking questions, and make sure everyone has equal time. And then the other thing is to use the chat or hand up function to get our attention. That again would be if we had people on Zoom. But I will say that Jewel is monitoring the comments on our Facebook Live. So if you have a question or a comment, anything like that, please do post that on the Facebook Live in the comments, and we will get to you for sure. And if there are if you're watching this at a later date as well, you can always send me, Ellis PELC, a message with any questions or comments that you have. All right. So I guess, Jewel, you and I can maybe answer these questions if you're comfortable with that, since we don't have participants. So the first one is, do you have a credit card? And the second is, if you have a credit card, do you owe any money on it? Do you want to go first?
Sure, I do have a credit card with my bank, and I do not currently owe money on it. I usually buy stuff and then try and pay it off relatively quickly, so I don't owe any money on it right now.
That's awesome. Wonderful job. I also have a credit card, and I do owe money on it right now because I've had some big unexpected costs come up recently. But that's one thing that's great about a credit card, is that when you have big unexpected costs that come up and you don't have enough money to afford them right out of your pocket, you can pay for them and then you can pay them off slowly. So that's what I'm doing right now. All right, so we'll move on. Oh, and just for anybody that, if you're doing this in a group with a few people watching this video, I recommend that you just have a little conversation about this. You don't have to share, but it's good to kind of know where everyone's coming from. All right, so now we're gonna meet Rudy. So Rudy is our friend who's gonna join us through this whole journey of learning about credit and debt and credit cards and all that fun stuff. So Rudy likes the fall playing with bugs and chocolate chip cookies. And Rudy dislikes tight socks, reaching the top shelf, and meanies. As you can see, Rudy has very short arms, so reaching the top shelf clearly is a challenge. All right, and Rudy is thinking about getting a credit card. So what we're gonna do is we're gonna kind of help Rudy figure out what kind of a credit card she wants and why she would want a credit card. So first off, we're going to talk a little bit about what a credit card actually is. Lots of you probably know if you have a credit card, but some folks might not know. And even if you have a credit card, you might not totally understand how it works. I think that's pretty common too. I know when I first got a credit card, I was really young and I don't think I totally understood how it worked, which is a way that lots of people can get into trouble, unfortunately. So credit is borrowed money with the promise of paying it back later. So basically, you got your credit card, it has some basically like a credit card is basically so the money that you're getting or that you spend on it, when you spend that money, you're making a promise to pay that money back. It's not money that you already have. So when you have a credit card limit or you can spend $1,000, that's not like, oh, you have $1,000 now. It's like you have $1,000 of promises to pay it back. So just a little bit more in depth. A credit card is an agreement with a bank that lets you borrow a certain amount of money with the promise you'll pay it back later. You have to pay it back at least a certain percent of what you owe every month. So that's a really important part too, that paying back at least a certain percent of what you owe every month. That is usually something called a minimum monthly payment. And it's really important that you make those minimum monthly payments. So we will talk a bit more about that later. Do you have anything to add to that, Jewel? I muted myself. Do you want to talk a bit, Jewel, about our friend Rudy here and why Rudy, or really anyone for that matter, might want a credit card?
Sure. So there's a couple of great reasons that Rudy could want to use a credit card. So that's to start building her credit history. So once you start building your credit history, that's basically a record to say, how do you handle your credit card debt? Are you able to pay it back pretty quickly? Does it take you a long time? Do you sometimes forget to make your payments? That is your credit history. So if you practice using your credit card and build good history, that means that you can get more loans in the future. Maybe for something like if you want to buy a house, if you want to use that loan, then you need to have good credit history. So you want to start building your history. Also to buy things that you need when you don't have money. So there could be a lot of reasons why you don't have the money to buy what you need. An example is if you receive a paycheck or a benefit check by mail and somehow it's gotten hold up and you don't have money to pay maybe your rent or buy groceries. You could use a credit card to go ahead and purchase that. And then when you do receive the money, you can pay that back later. Also to have emergency money if she doesn't have savings. Now, some of us have savings and some of us don't, but realistically, when emergencies come up, even if you have savings, you might need more than the amount that you have saved. So that's a great way to make sure that even in an emergency, you're still able to purchase the things that you need. And then to earn free money through card use with rewards. So certain credit cards will actually reward you for buying on credit. You might get a little bit of money back that you spent. So yeah, those are a couple of the reasons.
All right, awesome. Thank you very much. So yeah, there are lots of reasons to want a credit card. These are kind of some of the big ones, especially when you're just starting out, kind of building or wanting a credit card. If it's maybe your first card, these are lots of reasons to get one. All right, so again, I'm going to talk a little bit about what Rudy needs to think about when she's choosing a credit card. There are lots of factors here. This is always something that I recommend maybe going to a bank, your banker, to talk about, or talking with somebody who has lots of experience having a credit card, and they can help you figure out everything that you need to consider when you're thinking about getting a credit card. But some of the really important questions are, what does she want the credit card for? Why is she getting a credit card? Good reason to get a credit card is to start building your credit history, because that, like Jules said, can be really important in the future. Maybe she's worried about not always being able to pay those expenses that she has, all the kind of stuff that Jewel just talked about. Wanting to get a credit card just so that you can spend more money that you have on things that you don't really need is maybe not the best idea not the best reason to get a credit card, because that is often when people can get into trouble with owing a lot of money that they are not able to pay it back. Another important question when thinking about getting a credit card is, what bank does she want to have her credit card with, or what organization? So banks have credit cards, and maybe she wants to stick with the bank that she already, if she already has like a debit account, maybe she wants to stick with the bank that she's already using. Or maybe she likes to be able to meet with folks in person, although we can't do that too much now, but maybe she wants to get a credit card from a bank that's in her community so that she knows she can go in person and have meetings if she doesn't understand something that's going on. Maybe she she shops somewhere at a big box store a lot and they have a credit card, and that credit card, you can get rewards specifically to that store. So there are all kinds of places you can get a credit card. These are called lenders, the places that you can get credit cards from. So she wants to think about that. Ooh. And she also wants to think about what credit card is she likely to be accepted for. So when you go to get a credit card, you don't just say, I want this credit card, and then you get it. You have to do a whole application, and that's based on what Jewel was talking about, your credit history and your credit score. So those are all about basically how you've handled having money in the past. If it's something like Rudy's case, this would be her first credit card, so she doesn't really have a credit history. But they also take into account things like, are you working, or do you have a steady income that can be counted on? How much is that income? Do you have savings? All those kinds of things they'll take into account on your application. And they will decide you know, if you can be accepted for that credit card, and then also how much, what your the maximum amount you can spend on that credit card would be. So that's your credit limit. And if she applies for a credit card that she's not likely to be accepted for, that wouldn't look very good on her credit history, like Joel was talking about. And the reason that you don't want something to look bad on your credit history is, again, because if you ever were to want to get a different credit card or any other kind of credit, like a loan, student loans, etc., it makes it harder to get those things if you have kind of negative things on your credit report. So she wants to apply for a credit card that she thinks she's likely to be accepted for. The other important questions when looking at and choosing credit cards are, what is the interest rate? So how much the interest rate, and it's usually an annual interest rate, how much is she being charged on what percentage of the amount that she owes to the basically credit card company is she being charged when she hasn't paid that amount yet. So that's really important, because if she's being paid, if it's a high interest rate or a high percentage, then she's going to be continue to owe more and more as long as she doesn't pay off that credit card or leave some amount on it while she's working to pay it off. The other thing is, what are the fees and penalties? So credit cards, much like a debit card or a saving, like a checking account or savings account, often has annual fees or monthly fees. So she wants to think about how much is she paying monthly or annually. Does she have money to be paying those fees? And then, are there any penalties on the card? So say if you you know, don't pay back how much you owe for a long time, if you do certain kinds of transactions, are there any penalties on the card? And then the other thing that Rudy might want to think about is, what are the special card benefits? So like Joel just talked about, some credit cards you can get money back. Some credit cards you can get like air miles to use with airlines. Some credit cards, well, they do all kinds of different things. They're all different kinds of benefits. So you might want to think about too, what kind of benefit do I want from my credit card? And that might help you decide as well. All right, so now we're going to talk about Rudy's situation, so Rudy went through and she answered all those questions that we just talked about on the last slide about what she needs to think about when getting a credit card, because we're going to help Rudy choose a credit card and we need to know what her situation is. So Rudy wants to build her credit, and her credit history, like Joel talked about, and be able to make bigger purchases that she can pay for over time. She's been working for 3 months at her first job as a grocery store cashier, and that's a pretty steady job. She's getting the same income every month, and she's doing well, so it's looking like she's going to have that job for a while. Rudy wants to get a credit card from a bank she can go to in Picton. So Rudy lives in Picton. She likes to go in person to the bank if she needs any help. So she wants to get a credit card from a bank she can go to in our community. She has never had a credit card before, so she should consult her banker to find out what card she is likely to be accepted for. That is definitely important. Again, like I said, if she applies for a credit card and she's not accepted, it could look negative on her credit report. So she wants to consult her banker about what they think she's likely to be accepted for. Rudy wants a card with the lowest interest rate possible, so she doesn't, if she's not paying everything she owes on her credit card back right away, she wants the lowest amount of money to be, she wants that to increase the lowest amount possible as long as she doesn't pay it. So that's usually something that people want, but sometimes it's a trade-off. So sometimes with the card, you'll have a higher interest rate so that you get something else like low fees. So Rudy also wants a card with the lowest fees possible. So that might be a trade-off for Rudy, where she wants to maybe have no monthly or annual payments for her credit card plan, but that might mean her interest rate is a little bit higher, or she might want a little bit lower interest rate, but that might mean that she has to pay a little bit more monthly or each year for her plan. And then Rudy would love to get some kind of rewards from her card. You know, you always want to get some free money, which you can do with a credit card sometimes. So Rudy's definitely into that. That is what she is looking for. All right, so we are going to choose a credit card for Rudy. So because we don't have participants today, what we're going to do is just go through this quickly. We're going to go through and talk about each of the cards and the benefits, and then maybe Joel, you can tell me at the end which card you think is probably the best choice for Rudy to apply for. If you're doing this, if you're watching this later, I would recommend going through. We're going to show all the card options. And what you can do is after we go through all the card options, just take a minute to pause and talk about each card and decide which one you think would be best for Rudy based on her situation. Because there's a big spoiler alert after the cards, because Jewel's going to tell me which one she thinks is the best card for Rudy, and we're going to discuss that. So yeah, that's what I would recommend. So I've gotten a few different credit cards. All right, so the first one, and these are real credit card options that I just screenshotted from the internet. So these are real cards that Rudy could actually have. All right, so this is the BMO Cashback MasterCard. It comes with 5% cash back in your first 3 months. So that's one of those special benefits I was talking about. Get 5% of what you spend in cash back, meaning you get some money back. And that's for your first 3 months. So that's like an offer, because that's how they're trying to get you to get the card, is that's your first 3 months. They're like, if you get this card, you're going to have 3 months of getting 5% cash back. That's awesome. All right, you get a 1.99% introductory interest rate on balance transfers for 9 months, 1% fee applied to balance amounts transferred. So that really depends on what you're doing with your banking. We won't go too much into that right now. But that's if maybe you have a credit card and you have with a bank and you have like a checking and a savings and you're transferring amounts between those. And then after the next one is you get 3% cash back on grocery purchases, 1% cash back recurring billings, and 0.5% unlimited cash back on all purchases. So that's the cash back, the special something about this card. And again, you get 5% cash back in your first 3 months, and then it would revert to getting 3%, 1%, and 0.5% depending on what type of purchase you make. And there's no annual fee, which is awesome. And now what we can look at down here is interest rates. And these are pretty high interest rates. So where you see it says purchases, if you can see this right here, that is an interest rate of 19.99%. So that means as you on purchases that you make, and until you pay those back, they're going to grow annually by 19.99% interest rate. So that's 19.99% of what you still owe. And then your cash advances would be 22.99%. So that's if you convert, like you use your MasterCard to get cash, you have a higher interest rate until you pay that back. So 22.99%. So again, this is a situation where these are higher interest rates, but she's got a zero annual fee card. So you're not paying any money. She's traded that in for some higher interest rates. And you'll see that pretty often with like an introductory, what might be called an introductory credit card, where they have a bit higher interest rates because people don't have a huge credit history to show that they're really good about paying back their credit. All right, option number 2. The BMO Cashback World Elite MasterCard. Looks very fancy and black. It looks all nice and shiny. All right, so you get 10% cash back in your first 3 months and the $120 annual fee waived in the first year. So right here we have a couple hints. We got 10% cash back for the first 3 months. That's a lot of cash back. But, well, and we get $120 annual fee waived in the first year. So for the first year of having this card, you aren't paying the annual fee and you're getting the 10% cash back for the first 3 months. But that shows us that there is an annual fee of $120 after this year. And most of the time, if you get a credit card, you're going to have it for more than 1 year. So $120, that's a pretty high annual fee. You earn 1.5 cash back on all other purchases, so this is a good cash back card. Another special thing about this card is that you access over 1 million Wi-Fi hotspots around the world. So this could be a really good card for somebody who is traveling. I think this is probably why it's called World Elite, because this could be a good one for someone who's traveling and wants Wi-Fi. And you get a complimentary membership in MasterCard airport experiences provided by Lounge Key. So that's a fancy something that happens at the airport. I don't know too much about what that is, but probably not something that our friend Rudy would use too much. But again, you've got an annual fee of $100. You have these same relatively high interest rates on your purchases and cash advances. And also down here, if you see at the bottom, you've got a minimum of $80,000 individual or $150,000 household annual income required. And what that means is you have to prove that you have that kind of income to be able to get this card. All right, our next option is the RBC Cashback MasterCard. So this is another introductory card. So what we've got here is no annual fee, earn unlimited cash back. There's a percentage for that. I don't have it here. There's purchase security insurance on this one, so that means, and that's probably the case of BMO cards too, because that's usually there. But that means that if you purchase something and you don't get it, you have security insurance on that, and then there's extended warranty insurance. So those are good things. They're kind of protecting you in terms of if there's like fraud on your card, or if you like order something online and it doesn't show up and you pay for that with your card, all this kind of stuff. You have an annual fee of 0%, a purchase rate of 19.99%, and a cash advance rate of 22.9%. Something I would say about this one is that if we're just looking online, it's hard to tell if this is a good card because we don't know. It says unlimited cash back. We don't know what percentage of our purchases we're going to get for that cash back. We don't know how much we're going to get. So that's a little bit hard to decide on. All right, and then the next one is the TD Cashback Visa card. So again, we got the $0 annual fee, 90.99% interest rate on purchases, 22.99% interest rate on cash advances, which is the same as the other ones. And this one also, you can have more card holders on this plan for $0. So if Rudy maybe were to have a partner and they wanted to share this credit plan, then she could put them on there and they'd get a card as well. And something, so this one gives us a little bit more information. So we have 1% in cashback dollars on eligible grocery purchases and gas purchases, and on regular recurring bill payments set up on your account. You have 0.5 cashback on all other purchases made with your card. And you can use your cashback to help pay down your balance that you owe on your card. So that's awesome. And your cashback dollars don't expire. All right. And this one, you'll also have all of your eligible purchases, and that's when you'd have to figure out what's an eligible purchase, are covered with purchase security and extended warranty protection. All right. So that's awesome. So I'm just going to actually go back here. All right. So Jewel, what credit card do you think would be best for our friend Rudy, and why?
Well, let's walk through them a little bit. So can we go back to number 2? So number 2, the World Elite one. I don't think that's really any good for Rudy because Rudy can't even fit on the plane. And Rudy's not really trying to travel anywhere right now. And there's an annual fee. So I don't think this one's a great one for Rudy. So let's rule that out.
All right.
And then maybe let's look at number 2 or number 3. Number 3, I mean, it seems okay and there's no annual fee, which is great, but we don't know a whole lot about it. So I think it's hard to suggest that Rudy can go for this one. And if we go to number 4, number 4 is pretty good, no annual fee, and there's some cash back, but I think the cash back percentage is actually, it's not as high as the first one. So let's go to number 1. Yeah, number one has that. Number one has that bonus offer of the 5% for the first 3 months. And then you do get higher cash back. So for groceries, it's 3%, 1% for bill payments, and then 0.5% for other purchases. So I think overall, this one is the best for Rudy.
Okay, awesome. I would agree. So I think the BMO Cashback MasterCard is the right way to go for Rudy. So as long as Rudy goes in and maybe talks to a banker at BMO and gives all the information to a banker there, and that banker thinks that Rudy's going to be approved for that card, then she could go ahead and apply for that. So Rudy, 2 weeks later, has gone into BMO and applied for that card, and she is approved for a credit card. Her credit limit is $3,000, so that means that the most she could possibly spend on her credit card is $3,000. She has an annual fee of $0. Interest rate on purchases is 19.99%, and like we saw, she gets cash back on purchases. So that's awesome. She did a great job getting that.
And I'll just mention too that I think it could be if you feel nervous, doing things in public or maybe going to a bank. Like sometimes I feel nervous asking about things at a bank. So definitely looking at your options first can help you feel a little bit more confident when you go in, so you're not feeling as unsure about yourself. So I think that's important to mention as well. It's okay if you feel nervous. It's something that can be difficult for all of us, but a good place to start to help is to make sure you have an understanding of the different options available to you. And like we have said last time, if you would like help with your personal finances, you can always make an appointment with us at Prince Edward Learning Center, and we can definitely help you with that.
Yeah, thank you very much, Jewel. That's a super good point. It can be pretty nerve-wracking to go into the bank. So something else that I recommend doing is if you have anybody else in your life that has a credit card or has some different kinds of credit, you could definitely talk to them about it too, because they might know a little bit more as well. But as Jewel said, you can always come in to the Learning Center, make an appointment with us, and we can go through this with you as well. And then the other thing I wanted to point out is you see that Rudy's credit limit is $3,000. That doesn't mean that Rudy should spend $3,000 on her credit card. So remember how Rudy's trying to build her credit history? She's trying to build her credit score, which is the thing you need to get loans in the future, like if you want a house loan or like want a loan to buy a car or something like that, or even for renting, they look at your credit score, right? What you want to do to build the best credit score is you want to spend a maximum of 30% on your credit card. So 30% of your credit limit. So for Rudy, 30%. So for Rudy, 30% of her credit card is about $900. So she doesn't really want to spend more than $900 on her credit card if she can help it. Of course, if some big payments come up that she needs to make, she can spend more than that. She can spend up to $3,000. But if she doesn't need to do that and she wants to kind of build her credit score to be as positive and high as it can be, she wants to spend kind of around that $900 to $1,000 mark maximum on that credit card. All right, so 5 months later, Rudy's gotten into a bit of a situation. Her pet bird, Chirpy, who you see right here, very beautiful bird, got sick, and Rudy had to pay $1,000 in vet fees. Very expensive. I hear vet fees for birds can be quite expensive. She only had $225 saved up, so she paid $775 on her credit card. She spends almost all the money she makes every month on essentials, doesn't have a lot of room in her budget, and she won't be able to save up $775 to pay her credit card off for a long time. What can Rudy do? So, Jewel, do you want to talk a little bit more about the situation that Rudy's in now?
Okay, so essentially right now, Rudy has credit card debt. So let's talk about what that is. So credit card or debt in general is money that you've borrowed that you haven't paid back yet. So an example of that is if I go to the store with somebody and I don't have any money on me, I don't have a debit card, a credit card, or any cash, I say, oh, can I borrow $5? I want to buy something for lunch right now. If they give me that money and I buy the lunch, until the time that I pay them back, I am in debt to them. So it's the exact same thing with a credit card. You can borrow money from the bank, and until the time that you pay it back, you have debt. So when you spend money on your credit card, you have debt until you pay that money back to the bank. And then there's other kinds of debt too. So an example is student loans. So if you take out a student loan to go to college or university, maybe a trade school, until you pay that money back, then you'd have debt. There's mortgages. So for when you want to purchase a house, you have a mortgage or house or property. And then lines of credit is also another form of debt. So you can borrow up to a certain amount and pay it back over time, but you have to pay interest.
All right, awesome. Thank you. So yeah, that's a bit about debt. So now Rudy has credit card debt. She owes on her credit card and she's not sure how she's going to pay it back. She owes $775. So she's $775 in debt to her lender, which is her credit card company. So she needs some help paying off this debt. So we're just going to go through some tips for paying off credit card debt. And these tips you can kind of mix and match. Some work for some people, some work for other people. And it also really depends on the situation. So how much you owe, who you owe to, what your interest rate is, all that kind of stuff. So something that you can sometimes do if you need to pay off your credit card a bit quicker, is to adjust your budget a little bit. Even if you could just squeeze a little bit more out of your budget towards your credit card debt, that can help you. You want to pay off as much as you can each month. So you want to make at least the minimum payment, because that's when you might have a fee, is if you don't make your monthly minimum payment. In your monthly minimum payment, it'll tell you, you can, if you use online banking, it'll tell you that right on the screen. If you don't use online banking, you can find out from your bank. That monthly minimum payment is determined based on how much money you owe. But you want to make sure each month you make that monthly minimum payment. If you don't, again, you're going to be getting some fees that you'll then have to pay along with your monthly minimum payments. It is better to pay off your debt than have a lot of savings. So while it's really important to save money, if you owe money, that's like if you have debt, that's like having negative money. So it doesn't really make sense to be stockpiling money over here when you have money over here. And you could just use this money that you have over here, put it on top of this, and then you break even. But again, that's always something for you to choose. If you have a lot of debt, sometimes what people will do is you set a certain amount of money each month to pay off your debt, and then you set a certain amount to go into your savings. And that way, while you're paying off this debt, you don't have to, and you have an emergency, you have some savings here to pay for if you have another kind of emergency or big payment. So I know I just contradicted myself a bit, but really what it means is just based on your situation, you can decide. But definitely you don't want to be putting a ton of money into savings and just letting it sit there when you have debt that you need to pay off. If you have multiple credit cards, so Rudy's not really in the situation, but we'll talk about this. If you have multiple credit cards or multiple kinds of debt, it becomes a little bit more complicated to pay off your debt, but there are lots of things you can do. So something you can do is pay off the credit card with the highest interest rate first. That's a choice you can make. So there are a couple different ways to do this, but pay off the credit card with the highest interest rate, meaning you're getting charged the most money, or you're owing more money the longer you wait on that card. Then you want to pay off the card with the lowest balance first. So sometimes it's really nice just to have a win under your belt. If you think you're going to be able to pay off one of the credit cards quickest because you owe the least, sometimes it's nice to just get that over and done with. And then that's a good way to build momentum and feel good about the way that you're handling your money. Something you can also do a lot of the times, if you go and talk to your bank or talk to your lenders, you can consolidate your debt. So you can say you owe money on this credit card and this credit card, you can make an agreement to move the money you owe from this credit card all onto this credit card, and you only owe money on this credit card and you owe the same amount. But it's just easier to pay it off because you're only paying one interest rate instead of paying two interest rates. So that's something that, again, can be kind of complicated and is a situation where you'd probably want to talk to somebody with a lot of experience working with debt, like a banker or someone that you know in your life who has kind of experience with that. And then the biggest recommendation that we have for anybody that has debt and is a little bit stressed about trying to pay it off, and something that we're going to work on for Rudy, is to create a debt repayment plan. Ooh, excuse me. We're going to go into that. So what is the...
I'll jump in for a second,
Yeah.
Alex.
Yeah.
So also just want to note that debt is something that causes a ton of stress for a lot of people. And people can also feel ashamed or embarrassed to say that they have a debt. And actually we know from surveys of Canadians that a lot of Canadians have debt, and it is a big source of stress for a lot of people. So definitely we understand that it can be stressful to even talk about or think about. But there are ways, like we're going to talk about, to manage your debt and address it. And even if you're taking small steps to work at it, you should be proud of yourself, because that's a step in the right direction.
Yeah, absolutely. That's a really important point. Debt can be really scary, and we're hoping that what we talk about today can make debt a little bit less scary and stressful, because it certainly can. And you know, having a credit card and getting into debt is something that a lot of people, you know, I would say probably majority of people in Canada have some kind of credit card debt. Not just, I would say, there's research. We know that. And that, like Jules said, debt is one of the biggest stressors for adults in Canada right now. So, you know, it's really not shameful to have debt and be struggling to pay it back or be stressing about it. So that's what we're hoping to talk about. And so what we're talking about now, a debt repayment plan, can be a really good way to just get everything down on paper, because sometimes when you owe money, it can like just spin around in your head and feel really stressful, and it can be really hard to have clarity or make a plan about it. So this is a way you can make a plan, get it down on paper, and hopefully have a bit more clarity about it. So a debt repayment plan takes into consideration all of the debt you have and income. So if you have multiple kinds of debt, you're going to look at that, and you're going to look at all the income you have. It helps you make a strategy for how to pay back your debt. It gives you a timeline for how long you're going to take to repay that debt. It helps you decide how much money to pay towards your debt every month, so kind of that budgeting aspect. And it contains a list of all your debts. And that includes the name of your lender, so that's your bank or your credit card company, the total amount you owe, the interest rate on that credit card, so how much you're being charged on top of what you owe each month, and the minimum payment due each month. It also has how much money you have each month to pay off debt. So that would be, you'd look at your budget and say, hey, I think I'm going to have this much money each month to pay off my debt. And then it also helps you choose a debt repayment strategy. So there are a couple different major debt repayment strategies that I'll talk about. So the first one, the first one is Avalanche. So that is, you pay off debts with the highest interest rates first. So again, this is for if you have multiple debts. You basically, that's just paying off the one that you're getting charged the most for first, which makes a lot of sense, especially if you have multiple debts and you have your interest rates vary. And then the other one is Snowball. So pay off debts with the lowest balances first. And that's what I was just talking about before with wanting to get that momentum. So you say, okay, maybe you have a credit card that you owe $200 on, and you have a credit card that you owe $2,000 on. Well, you're going to, and maybe they have the same interest rate. Well, you're going to be able to pay off the credit card with $200 first, and maybe that'll feel good. And so that'll help you to kind of be able to work towards and build momentum towards paying off the credit card with $2,000 on it. So the other thing that a repayment plan includes, like I was just saying, is a timeline from the time you start paying off your debt to the time you will finish paying off your debt. Oh, excuse me. So again, it allows you to kind of think about in your budget, okay, I'm going to put this much in my budget towards paying off my debt each month, and if I put this much towards it each month, I'm going to have it paid off in this amount of time. All right, so what we're going to do is we are going to make a debt repayment plan for Rudy. So Rudy has $775 in debt from paying for the vet bills, and we're going to help Rudy make a debt repayment plan to pay off her credit card as quickly as she can based on how much she has to pay it off. All right, so this is the information that we have that we're going to use to make our debt repayment plan. So maybe what we can do, Jewel, is as we go through this, you can go through and fill out the sheet that I made for the debt repayment plan. Do you know where that is?
I think so.
And then we can show people afterwards what the debt repayment plan can look like. And there's a sheet that we can link. We'll put a link in the comments, and you can use that sheet to create the debt repayment plan for Rudy using this information. So I would pause it on this slide, go through that sheet to make the debt repayment plan for Rudy, and then we can, and then you can play it again, and you can see if your debt repayment plan looks the same as our debt repayment plan. All right, let me know when you're ready, Joel.
Didn't try.
Yes. It's in the it's in with the facilitation guides.
Oh, it's not a form, it's just a document?
Yes.
Okay,
sorry.
Okay, I got it.
You got it? Okay, perfect. So here's what we know. We know that Rudy has $775 of debt on her credit card. And Rudy's credit card has an annual interest rate of 19.99%. And the minimum monthly payment on Rudy's credit card is $10. So she has to pay at least $10 a month. Rudy usually puts $25 into savings every month. And Rudy usually spends about $53 a month. Oh, excuse me. On toys and treats for her bird. So that's somewhere that she might be able to shave down her spending a little bit and might be able to use some of that money to pay off her credit. Rudy does not usually have extra money in her monthly budget above what she already has. All right, so we're going to take that information and I'll just show you what we're looking at here. So this is our information that we have, and this is how we're filling it out. So this is Rudy's debt information, how much money Rudy has each month to pay off debt. So that's something that we need to discuss. So Jewel, how much money do you think Rudy could have kind of maximum to pay off debt each month?
Can we go back to her information? Her full.
I think it's just right at the top here.
I think she can spend a maximum of $53 because she spends it on toys and treats. And she could use the savings as well.
Yeah, so it's kind of, it depends on what she wants to do. So she could spend the $53 a month if she didn't want to get toys and treats for her bird anymore. She decides this is a priority. She could use $25 from savings. So the total she could do would be about $78 a month if she didn't want to take money from either of those, or if she wanted to take all of those amounts and put that towards paying back her credit card. But maybe she's like, okay, I don't necessarily need to be putting money into savings right now, so I can take that $25. And then maybe she still does want to be able to get some toys and treats. So maybe she takes another $25 from her toys and treats budget. So then let's say she decides to spend $50 a month to go towards her credit card.
I have a question. Birds normal food, or is it special treats that the bird doesn't have to have?
Treats are special treats. All right, so do you think spending about $50 a month towards her debt sounds good?
That's reasonable.
So let's put that in. Sorry, so this having a conversation is very awkward when we have to mute ourselves and unmute ourselves. All right, so Rudy has, let's see, $50 each month to pay off her debt. So Rudy's debt repayment strategy. So she doesn't really need to do a debt repayment strategy because Rudy only has one debt. So she's only going to work on repaying that one. That makes things pretty clear and simple for Rudy. All right, so we'll just do some quick math here. Jewel, do you have a calculator or a phone with you? All right, so let's look at our math. So if we owe $750, and we're not right now going to account for interest you would be charged, but if you were doing this for real, for your debts, you'd want to take into account how much interest you're going to be charged on how much you owe. So that's $750 a week. I'm going to do divided by, or sorry, $750 total divided by $50. Apparently I can't type when I'm on Facebook Live. $50 per month. How many months does that equal?
15 months.
All right, that equals 15 months. Thank you, Jules. So it's going to take Rudy 15 months paying $50 a month to pay off that $750. And that sounds like a long time, but it should be pretty okay because Rudy will be able to, is making the minimum monthly payment of $10, so she won't get any fees on that. And then she can decide too, okay, maybe she wants to make that a little bit lower. So she has a maximum of $78 that she can possibly spend a month. So maybe, let's see, if she wanted to spend $70 paying it off, how much shorter would that take? So we'll do $750 divided by $750 total divided by 70 per month. How many months would that take her?
A little over 10 and a half months.
Okay. So as we can see, that makes a pretty significant difference in how long that's going to take, which means she's going to be charged less interest. So that's always a decision that she's going to need to make between whether it's more important to her to have a little bit more extra money, or it's more important to her to be paying that off more quickly and getting charged less interest. Did you want to say anything else about this, Joel?
Just to think that even though she's paying a significant amount to pay off her debt, she still does have some extra money. So there's still some fun things she can get for pet. And maybe she just needs to think about different ways to spend money. So before, I think she spent, was it $50 on treats and toys for her pet? So maybe it's like now that she's paying off her debt, 1 month she might buy a toy, next month she might not buy anything for her bird. And then a month after that, she might buy a treat. So spending her money in different ways.
Yeah, absolutely. When you're figuring out how to pay debt, you always are probably going to have to make some adjustments to your budget. But you want to make sure, again, if you go back to last week's budgeting workshop, that you still do have some money to take care of yourself and do the fun things that you like, if possible. All right, so we'll go back here. Okay. So what should Rudy do? So we just talked about it. Again, it kind of depends on her situation, but she should spend probably somewhere between her $50 and her total possible amount of $78 per month paying off her debt. And that is what we have for today. Do you want to give any closing remarks, Jewel?
Yeah, thanks so much to the Picton Library again for letting us use their space. This has been really great for us. And also a reminder that we are socially distanced, and that's why we're able to not use our masks. And we hope that this information is interesting and helpful. And again, if you have more questions, you want to talk more about your personal finances, please do make an appointment with us, and would be really happy to help.